All right, hey guys, welcome back to this channel. Hope you have a wonderful day.
Yeah.
In today's video, we're going to talk about something different. It's actually talking about mortgage.
One of our mortgages.
Yeah.
So we got one of the investment property loan. We fixed the mortgage, the rate.
Yeah.
I don't know what's that called.
So
we fixed the rate 2 years ago, and it just expired a few days ago, and I forgot.
There's bound to be, for those of you who's thinking of going into the market or already purchase a property or investment property, whatever type of property that you have, one of the things that you're bound to get is a mortgage. Based on the mortgage, sometimes it gets confusing. Should you fix it? Should you leave it in variable? Which option is better? This is, I guess, to clear...
Well, based on our experience and our situation.
To clear the myth or the information out there from our own personal experience.
Yep.
So, because beforehand, when we first started this, I was so confused. There's so many products.
So many options. Like,
many
are you paying P&I, principal and interest together, or just interest? Are you investment loan or principal place of residence? Because they charge you differently. No, I think back in 5-6 years ago they charged the same, but because of few years ago the property market boomed a lot of investor paying interest only. Yeah. But then when the interest expired, you have to refinance.
Some of them do that.
They cannot refinance.
And some of
them cannot. And then they cannot pay for the P&I, the principal and interest together. So I think that time, we just sit down, search all this stuff, and get our head clear about what's the difference between fixed and variable, and should I pay P&I or interest only?
For us, it's not about the total number of property that you can acquire, because it doesn't make any sense if you have, let's say, 10 properties, but they're all you're not paying off down the debt
principal
of doing just the interest on it. That's not the strategy that we work on. We would rather have only a small number of properties, let's say 3, 2, 4 properties, let's say, but minimum paying off the debt as quickly as possible to get leverage on, I guess, a lot of things to free up your capital in the future.
Yeah.
And we don't flip properties, let's say.
No.
We just keep it and hold it as long as we can.
Yeah. But our original strategy was just paying interest only, not paying down the principal. But now why we changed, 180 degrees changed.
So, go on.
Yeah, it was because we did a calculation a few years ago when our mortgage started, I think finishing the interest period only. We were those investors, one of them. We were paying interest only, and then the bank changed it. If you're only paying interest and it's investment loan mortgage, they charge you the highest interest. Yeah. And then we did a calculation. Okay, what if I'm paying principal and interest together? And if it's variable, okay, the rate going down. And then what if I fix it for certain of year? You can fix for 1, 2, 3, 4, or 5 year. I think normally 7 is the maximum. But 2 year, fixed for 2 year, always the lowest, right?
That's based on our bank. Based on the lender.
On our experience, yes, based on our lender, correct. And then, so we found out if we pay principal and interest together and fix it for 2 years, is the cheapest rate we can get. So the previous 2 year, our rate was 3.59. That's a fixed 2 year investment loan mortgage.
Versus if it was a
variable? I can't remember that time because variable changes all the time.
That's true.
So it changes and it's higher. But just today we fixed it. Our loan amount is just under $300,000 for this particular property.
So, a breakdown of it. So if you're brand new to mortgage, it will get overwhelming, but let's have a simple format of this. Imagine if you're buying a property and you've got a property worth about $300,000, which is where our mortgage is at the current stage. Okay, so at the current situation is our mortgage is 300,000. If it's variable, it's going to cost us 4.25%, let's say.
Yep.
However, if you're going to fix it,
For
2 years, it will be 2.29% over 2 years. And we're paying principal and interest. We're not paying interest only. So.
Well, can I?
Yeah, go on.
Because I got friends, and then they were like, "Why are you paying principal, not only interest? Because then you can't claim tax on that principal bill." Yes, you cannot claim tax for the payment you go pay for principal, because we're not high income earner. We can't get much tax benefit anyway, so that is not our goal. But everyone's situation is different. We are not accountant, or we're not financial advisor. Talk to your accountant if you want further information. But for this is our strategy: pay P&I.
Our strategy is have no debt.
Yeah,
that's the concept.
Yeah, a few months ago we already paid off one of our investment property mortgage.
So imagine if you have multiple investment property with no debt, with no payments.
Yeah.
And you're getting an income stream permanently, that will the world will look differently.
This is passive income.
So compared to the myth out there where you have to be negatively gearing, you should pay only interest only repayment and all that jazz. After experiencing that, compared to where we are now, the life that we're in,
it's more comfortable. Better. So I think it's all marketing scheme.
Yeah, people.
Those strategy work, not for us, but depends on your income, your situation. But now, because our income's not as high, we got 2 little kids, dependent, we can't do much.
Yeah.
But if you're single or double income high earner with no kids, yes, may work. Because if you're high income, you can acquire a lot more properties and you can afford it. We can't. But for us, it's like, we used to hold a lot of property. Outside, we look fancy. Like we hold that many properties. But now we look daggy and think, I don't pay that. I don't have mortgage on that property.
Correct.
And no one else.
There's no payment, and when there's no payment, you don't have to chase around. There's lots of
the stress level is a lot less because, for example, that property, the tenant is moving out, and we paid off next week.
Next week. Sorry.
And since we don't have mortgage, we're not too stressed. Of course, we want another tenant to move in as soon as possible, but it's okay. We can hold it.
Versus if you have repayments on that particular property. When it's empty, I still have to pay rent. I have to pay
the bank.
Insurance.
Yes.
So that's the reason why I would rather pay it off as quickly as possible to minimize stress.
Yeah.
That's one. But like if you're, I guess, have a property and have a mortgage and have only interest only, by all means, that's the strategy that you go to, kudos.
Yeah, we're not saying what strategy is right, which is
wrong.
Not right. It's just suitable for us
and
our current situation. We may change in the future. Who knows? Don't know.
The way I see it as well is you've tried your way. It works great.
Yeah.
Try a different way. Taste what it feels like.
Yeah.
And then if you don't like it, you can go back to the old way.
Yeah.
From your experience, would you go back to that interest only?
Well,
and what was it?
If I'm a high income earner,
based
150k plus or 200k plus,
based on our lifestyle,
then I may consider. Now I can't. We can't afford it. We can't. The stress level, and if you pay interest only, your repayment is a lot higher. Yeah, so it doesn't work with us. It just different situation.
You get tied up into a job, and you will not be able to go to the lifestyle that we're in.
Correct.
Yeah.
Correct.
So back to the scenario.
Yeah.
It's basically a $300,000 loan.
Correct.
So it was, if it's a variable, 4.25, and if it's fixed rate for 2 years, it's 2.29 principal and interest repayment. That brings it down to a weekly repayment, roughly $320.
pause. We're doing weekly because
per week.
Because normally when the bank sign it up, I think they choose monthly. That's the least payment you can pay. So normally just default by monthly, but then we change it to weekly because there are 52 weeks in a year. As opposed to the bank, they use 12 months, which I think they kind of calculate by daily, but then you actually pay less. But we're just trying to pay additional and plus P&I, and plus if we have spare cash, we just put it in as well.
So if it was a variable rate at 4.25, our weekly repayment would have been $380.
Yep.
Versus what we're doing right now is our repayment is $320.
Yeah.
With a gap difference of $60. Sorry, $60 gap.
Yeah. So we're saving $60.
At the current stage, we've been paying
366 was the last payment for the last interest rate. So officially, we're saying saving $40 for locking in another 2 years.
But instead of that, instead of I guess going down to the minimum repayment of 320, well, our plan is leave our repayment at the 360, 370.
The minimum, yeah.
So that way we're accumulating a lot more.
We are paying down the loan much faster.
The concept is paying it off as quickly as possible with no debt. And about the tax thing, I deal with it when it comes to tax time.
Well, tax you can't escape anyway. If we earn more, then we pay more tax. But we're getting more money in our pocket instead of forking it out and get little back.
For us, it's like paying tax is a good thing instead of trying to avoid it.
Yeah. Well, the reason we chose for that too, because we don't have intention to pay off the mortgage within 2 years.
Yep.
We're not loaded. And we're trying to put more money in ETFs instead. We try to get both sides working.
Yeah, so one side increase our, I guess, managed fund, let's say ETF, management, micro investment and all that jazz. Increase that, and we're also paying down the mortgage as quickly as possible.
Correct.
So we divide it into two, in a sense. What we do with our cash from all our other income, let's say. And that's what we come up with. As a whole, with our product anyway, our mortgage product, we can pay up to $5,000 with no penalty.
I think it's based on the lender. If we fix
on the product,
our current bank, maximum we can pay additional $5,000 for that fixed calendar year without penalty. But we did break the fixed rate quite often. We know the penalties. Even you break it, it's worth it.
If you have the big lump sum cash.
Yes.
So which I've done.
We've done a few times. Yes. Yeah.
So and that's what we did.
Or maybe the rate is really attractive.
So, I mean, if it goes to zero, definitely I'll go.
Apparently going to, cash rate, apparently going to be minus, I don't know.
So, anyway, and on top of that, for us to figure these things out, it makes it easier for us to budget.
Yes.
I'm budgeting every week, it'll be this amount, whereas if it's variable, this week will be $320 per week, and then next week will be maybe $400, because the rates can't just stay down, it might go up. Maybe 0.5% or 1%. It will bound to go up once in a while. So any other tips or any other?
No, we'll choose. I think if ever we're going to choose the variable rate only because we're seeing that we're going to pay off the loan in short period of time. Then you can avoid the penalty. One is that the flexibility. Because last time I think we paid off our loan and then they charge us, I don't know, a few thousand, just pay it.
It's like
I pay you a few thousand, but then I save like tens of thousands of interest.
Hundreds of thousands of interest. Correct. If we keep on going. So, and with us is a typical mortgage, let's say at the current stage is about 30 years.
Yep.
we try to pay that off quickly as possible.
Yeah, last one we paid it off within
In
within 7 years.
Yeah.
Less than that.
Less than
No,
7.
6 years or maybe 6.
Something like that. Under 10, I can comfortably
Less than 6 years because I
Okay.
was pregnant with our son, and our son just turned 6.
Okay, there you
Yeah,
go.
less
So
than 6 years.
this is probably the second one that we're going to be tackling,
Yep,
and then we'll be now tackling another property.
yep.
So, and all of this actually,
This actually helping us to achieve our goal to
Yeah.
be fire, to be financially free, independent, early.
independent early retirement
Yeah, because for the first property that we're already earning 300 plus per week.
on
Passive income.
Yep,
Correct, and if this is gone, and that will be a lot more.
exactly. So,
Yeah.
and after that, we're going to be paying off another property,
Yep.
another one, and then from then on, I don't think I can see myself buying a house with a mortgage.
Yeah,
If I'm going to buy something, I'm going to buy it in cash. So,
that's a lot of cash.
yeah.
Okay, I didn't know that.
So anyway, that's just my plan. This
Yeah.
is my
Our
plan.
experience and why
Yeah.
why we chose to fix our mortgage and pay P&I at this stage.
Hopefully it helps you guys out, understanding how mortgage works. If you are having that thought or that confusion, don't forget to subscribe, comment, guys.
See you next time.
Bye.
Bye, peace.